have up there, huh? All right, and we're live. What's going on, my people? All right, I have a quick one for you today. We have CPI data coming out tomorrow. Let's just take a look. You know, when they're expecting inflation to rise the most since 1982. We keep going back to 1982. Obviously, inflation was bad as 1982. What else happened in 1982? Stock market crash. What else? There was one in 87 too. But anyway, I'm not going to get too much into that. Bottom line is we got an inflation number coming tomorrow, and it's going to be a crooked number, and it's going to be ugly. Does the market have this priced in? You know, has this been priced in yet? You know, just look over the last couple of weeks. I mean, when did we find out that this number was going to be like this? We haven't really seen a lot of movement to the downside. Remember, we want to see bonds go higher here. That means rates are going down. Right now, they're just going, they're trickling lower. You know, they're just kind of playing this little game with us here, making us think that we're going to, you know, cruise into a range, and now, and this is kind of what I told you this would happen. I thought it would happen back here on this first test of this former support line right here. But, you know, we've got a second test before, you know, it lost steam. And while these candles do look somewhat decent, we got some wicks on the bottom of these guys. Nonetheless, we're going lower. Bond prices continue to drift lower, and rates continue to drift higher. So this number is going to come out early in the morning tomorrow. We're going to find out what's up at the very beginning of the day. I think it's possible that this number could be worse than expected. I think even if it is 7-something%, it's still got to make people who are buying bonds wonder, what am I doing? What am I doing? We talked about this a couple of days ago. The bond market is like the biggest investment market in the world. I think it was 120 something trillion. Stock market 49 trillion. So you look at those and you look at Bitcoin, that's not even a trillion yet, and you see where kind of money could shift from one to the other. That said, people would ask me, hey, what opportunities are you looking for? What are you looking into? I'm going to do a video about that soon. What I'm actually looking at, what I think is going to be the future hard asset premium. And it'll make sense to you. It'll make sense. A couple other things here. Homes are selling faster than ever before. Homes selling faster than ever before, a result of the inventory situation that we have. I need to get better about my production here. You can say hi if you want. We are live. What's up? Homes selling faster than ever. Ever. So that tells you something's going on. Well, I can tell you this. It's not loose lending. It's not bright, shiny object. These aren't brand new homes. It's not like new construction is flourishing or anything like that. No, it's just inventory. Storage inventory. That's what it is. This is probably going to continue. And kind of what we've been discussing is like, hey, rates go up. That makes inventory get worse because a lot of those people who are sell buyers, they're not going to want to do the buy side anymore. It's just going to get too far away from where they're at already. And so they're going to hold off on selling. It's definitely going to happen. Fed President Raphael Bostic said on Wednesday he anticipates hiking interest rates 3 or 4 times. So more than 3 hikes possible. This is the stuff I'm talking about. Now, that's needed. It's needed. Don't get me wrong. It's needed. Should have been done a year ago. And by the way, the Fed still hasn't raised a rate yet. So while we sit, and they have begun to taper on the bond purchases, but they haven't raised a rate yet. So we're sitting here, you know, looking at these charts going, man, you know, mortgage bonds just straight down. Looks like the backside of Everest. Not good. Rates up. But the Fed hasn't even really done anything yet. So how much is market anticipation versus how much is going to be when the reality comes? As I mentioned this week, the bond bullies haven't even gotten started on this yet. Wait until they do, though. We are going to see that day, and it's going to be this year. I don't look forward to it any more than you do, but I'm telling you right now, lock your rates, especially ahead of tomorrow. It makes no sense to play the wait and see game when you know you're getting a bad number. Even if we still get a bad number, like let's say 6.8, and we're expecting 7.2. Oh, upside surprise, 6.8. Wait a minute. The market's happy about 6.8% inflation. Bonds should pretty much sell off no matter what. They really should. But we'll see. The Fed seized $3.6 billion in Bitcoin stolen from Bitfinex hack. That was 6 years ago. That hack took place. What's great about this story and what I want to illustrate from this, and the reason why I put it on here so you can read about it, if you steal crypto, particularly Bitcoin, I know there's lots of different kinds of crypto now, but particularly Bitcoin, you cannot get away with it forever. What's funny is these people weren't even trying to cash in on it. They were just holding on to it. You basically, you can't cash in on it. Every piece of Bitcoin is attached to the blockchain. The blockchain knows where it is. It has to be in a wallet that is connected to the blockchain. The wallet has an address, like your house has an address, like your email has an address, and it's there. You can see what's in it. You don't know how to get to it, but you can see what's in it. You can look and you can see on the blockchain who's got wallets, how much is in their wallets, but you don't know actually whose wallet it is. All you know is the address. You don't have the keys to get in. So all this stuff is completely transparent. If you were going to steal money, if you were going to do something that was, illegal, illicit, the last thing you would want to do is use crypto. You'd use cash. Cash is easy. It's untraceable. Bitcoin, crypto, the opposite, hyper traceable. You can never get away from it. In fact, if you went to someone when you had $1 billion worth of Bitcoin and you said, hey, give me $500 million in cash and I'll give you $1 billion in Bitcoin, no person in their right mind would do that because they would be assuming all the legal liability and they would for sure get caught eventually. You have to. And there'd be no way for them to prove that you were the one who actually stole it and not them. So it'd be a terrible, terrible thing to do. And that's the reason why if you're into, this kind of stuff, if you look into this stuff, you'll see it's the worst thing to do is use crypto for bad purposes. So this is happening. Congress is moving to ban members from trading stocks. Pelosi finally drops her opposition. Unbelievable. After all those hundreds of millions it made, Nancy, how could ya? I guess she already cashed out. She rang the register a number of times over the past however many decades. You only need so much money, right? Good to see happening, though. That's something that I'm definitely into, and I think the American people want to see that, too. We don't want those conflicts of interest. This one is a good read. It's actually a video, but it's a good piece of content. The middle class, the American dream. This is the stuff I've been talking about. It's getting squeezed out. You're going to see in 20 years, maybe 30 years, 40 years, 50 years, I don't know. But at some point, probably in our lifetimes or towards the end of our lifetimes, you're going to see only rich people will be able to buy real estate. You'll have to be rich. You'll have to inherit it. That's what I'm saying. Buy real estate. If not for you, for your kids, for your grandkids. So they actually have a house that they won't have to pay $12,000 a month in rent for. That day will come eventually. Like the secret's out on real estate, Wall Street, BlackRock, major firms that have trillions of dollars, they are buying it. They're in there, and they aren't going away. Their appetite for it is tremendous. Remember that $120 trillion bond market I was telling you about? Remember the video I did about bond replacement? The real estate is bond replacement. They don't want to buy bonds anymore. They want the hard asset. They want to go straight to the source. They don't want the intermediary there, piece of paper, Wall Street paper pusher. They want to go straight to it. They want to own it. And there's tax benefits there too, which are also quite nice. So that is what's happening. It's going to continue to happen. There's nothing that can stop it. I mean, they would have to make a law saying that corporations can only own so much real estate. How anti-American would that be? So you can't stop that. It's happening, and we should all be prepared for it. So where do we go tomorrow on this thing? I mean, if worst case scenario, like what kind of downside are we looking at here? Well, I'm gonna zoom out a little bit here, and I'm gonna kind of show you what I'm looking at. So, let's do 1 year. Okay. Oh, I have to go back further than that. 2 years. If you look back 2 years, look at where we're at. These are the highest rates we've had in 2 years. And so we're kind of in no man's land to some extent, with regard to the fact that, we really don't. Let's see if I can get a longer time frame here. So we go back 2 years. We haven't seen bond prices this low in 2 years. So how far back do we actually have to go? You have to go back pretty darn far. Here it is. This is, okay, so that's the COVID debacle right here. And so this is kind of what I'm looking at right here. We had this COVID low, which actually was the beginning of a huge rocket move higher. This is the spot I've been looking at. Let me just chart this because it wasn't showing on the shorter term chart. It's pretty much right at 100. Let's call it that. So pretty much right at a price of 100, which is how far from here? 100 basis. We're at 101.17, so 117 basis points from here is where that is. Let me get my mug out of here. So if we lose 115 basis points or 117 basis points from here, what will that do to rates? Well, you're going to see rates go up probably, a quarter to 3/8%. If we get that, and that's kind of what I'm saying. Short-term worst case scenario. Long-term worst case scenario is much worse. But I'm saying this could happen this week. Like we could lose a quarter to 3/8% tomorrow. That's on the table. And this is why the title of the video today was Lock Your Loans Today, folks. Whatever you do. Even if you're out there and you have to pay a hedge fee for after hours lock, get those loans locked. I would not count on this. Now, I could be wrong. Right? I'm not always right about this stuff. Just most of the time. But not all the time. So if I'm wrong and we get a bounce up, how much room do we have to the upside? And this is where it really gets sad. We don't have a lot of room. We don't have a lot of upside opportunity here. There's so much resistance in the way. I mean, just look at this. The moving averages are all moving lower, all four of them, as they should be. We've got this piece of resistance to get through. This piece of resistance is doubled down by to the 25-day moving average. This piece of resistance has the 100? 50-day moving average. Then we have the 100 up here. And so on top of all of these technical lines, we've got moving averages heading downward pretty sharply that are also combining. So I think our best case scenario in the short run is probably just to make it up to here. And that would be like a 40 or 30, 43 basis point move. 33 basis point move. I couldn't do math there for a second. So 33 basis points to the upside, 117 basis points to the downside. That's what I'm looking at. So you can see where my optimism comes from. And while I do think that if this number that comes out tomorrow is really bad, could it like blow a top off? Like could we see like actual blood in the streets? We could. And that's what I'm more worried about. A lot of people out there looking for homes. A lot of people already think they know what rate they're going to be getting or what payment range. This moving target is tough. It's tough to deal with this moving target. A couple other quick things here. Let's see. Did I get to all that? Moves. American Dream. Yes. Okay, we're not going to talk about that yet today. We were going to check on. I'm going to start doing a little bit more discussion about bonds because if I'm right, what we're going to see, the next crash, everyone knows we need like a crash. We're like overdue for a crash. What's the next crash? I think it's going to be a bond market crash. What does that mean? Well, a lot of people don't realize it because they think it was a real estate crash, the 2008 crash. That was a bond market crash. That was not a real estate crash or a stock market crash, although you look at those individual assets and you see that they did crash. What caused it was bonds, though. Never forget this. Don't believe anything that you hear on this aside from the fact that the crash of 2008, the Great Recession, was caused by bonds. Remember what Wall Street did? They went and they bought ratings agencies. They didn't actually buy them in a legal way. They were paying people off. So these rating agencies had actual people who work in there that rate bonds, who were rating bonds, AAA. The bonds were garbage. So countries, municipalities, pension funds, grandpa and grandma were buying these bonds that they thought were like foolproof AAA. AAA pretty much means there's no way they're going to default. And if they do, you're still going to get paid because bond holders get paid before stockholders get paid. That's what AAA is supposed to mean. The bonds that are being sold were garbage. Garbage. And so it was actually bond fraud that caused that whole thing. Because once Wall Street had the bond agencies bought off, That's when they were like, just go get the paper. That's when all the crazy programs started coming. Why would they come up with so many crazy lending programs? Because Wall Street had the bond ratings agencies bought and paid for. So all they had to do was go get the paper, package it up. They could put it on someone's desk. They would stamp it AAA, and they could go sell it for a huge premium. It didn't matter what it was. That's what happened. So the bond market is what crashed us last time. The bond market, but it was tied to real estate, and that's the reason it dragged real estate down. It was Wall Street had basically gone inside real estate and set off bombs. We let them in the house. They set off bombs inside the house. That's what happened. This is very, very different. Let's look at bonds. So look at a couple things. We'll do a mini bond lesson today, and then I'm going to go. Look at this. U.S. 10-year on the left. Bund, the German 10-year right there. Japanese 10-year. UK 10-year. France 10-year. Look at those. Now, you tell me, if you're Japan, and you can issue bonds, for, let's say you're getting debt for 0.2%. So in other words, you're able to borrow money from your people for 0.2%. You see what you can do here? You can take that money you just borrowed and you can go buy the US 10-year and make 1.7 all day. Notice how the U.S. bond, 10-year, we're just looking at 10 years here. There's lots of different types of bonds. We're just looking at 10 years, trying to keep it basic. Look at the 10-year. Why is it that we have the highest rate? What's up with that? Why does the U.S., who supposedly is the powerhouse country in the world and has the highest credit rating of anyone, has never defaulted on anything, why are our rates higher? What sense does that make? Why should our government have to pay more money to borrow money than Germany, Japan, UK, France? It doesn't make sense. Now, there are a lot of reasons, a lot of things you could point to, a lot of things we could discuss about this. But the point is that this bond, the whole bond market together with inflation, coupled with inflation, makes no sense. And so ultimately, this will crash. The biggest problem that we're going to have is the government's debt. The government has just hit $30 trillion in debt. 30 trillion. So we got a lot of debt, folks. And if the interest rates start going up on that debt, it will become more and more difficult for us to make payments. That's the real concern ultimately, because that leads to higher taxes, which leads to less spending, and the cascading effect could be bad. Oil at $90. Gold's probably still right. Okay, 1833. Do you know that gold went up 8% last year, and they're giving us year-over-year inflation figures of 7%, which we all know is too low? I thought gold was supposed to be a hedge against inflation. What's going on with gold? What is going on with gold? I don't know. It makes no sense. Let's see. The cryptos are in the green today, at least a little bit. Nothing crazy going on there. I have that plotted for you here. Just looking at some of these areas, for Bitcoin, we called the move higher here recently, and it looks kind of like we're trying to put something in here. These are higher lows, okay? So you see these little cycles that are sort of firing off here, and they're firing off, higher low areas in these different cycles. So what's going on the upside doesn't matter as much, but just notice the low point is moving higher, and this is, right in a situation where there's a lot of resistance here in this 45.5 area, right where this topped out right here. A lot of resistance there. So it looks like there's momentum building up to potentially punch through that, and we'll be in the high 40s by the end of the week if it does. We'll see what happens there. You never know. Let's see. Yeah, let's do a couple questions here. I don't have a glass ball. Karen, thank you for asking. No insider information either. It's illegal. Best time to buy a home was 20 years ago. That'll always be the case. Thank you, Bill. Appreciate it. Love shares. We love shares. We love comments. We love the love.